My dear students, today we are going to do practical problems from the module Income from House Property. Okay, so first of all, let us read the question. From the following information, compute income from house property for the year 2019-20. Fair rental value rupees 1,50,000, municipal value rupees 1,60,000, standard rent rupees 1,80,000. The property has let out at the rate of rupees 12,000 per month. The assessee has paid 10% of municipal value as municipal taxes. The other expenses of the let out properties are repairs, insurance, land revenue rupees 40,000, ground rent rupees 10,000, interest on capital borrowed rupees 40,000, and loan was taken on 1/1/1999. Okay, so before doing problem, you have to draw a table like this. You can provide 3 columns, one particulars column and 2 amount column, one inner column and one outer column. Okay, so you have to write computation of income from house property for the previous year 2019-20. What is the first step? We have to write gross annual value. So first of all, we have to determine gross annual value. So you can write a working note here. Working note, that is computation of gross annual value. So in order to compute gross annual value, you have to compare fair rental value with municipal value, whichever is higher. That means fair rental value is 1,50,000, municipal value is 1,60,000, whichever is higher. So 1,60,000 is higher. You have to compare this figure with the standard rent. Standard rent is 1,80,000, whichever is lower. So 1,60,000 is lower. That figure have to compare with actual rent. So what is the actual rent? Okay, in the question it is stated that the property has let out at the rate of rupees 12,000 per month. So this is the actual rent. So you have to convert this figure into annual figure. So 12,000 into 12, that is the annual rent. So 12,000 into 12 is rupees 1,44,000. This is the actual rent received. So you can compare this figure with the actual rent 1,44,000, whichever is higher. 1,60,000 is higher. So this is gross annual value. So you can write in the column, in the inner column, gross annual value is rupees 1,60,000. Next step is we have to deduct municipal tax paid. In the question, it is given that assessee has paid. I think you are remembering one fact that in order to deduct municipal tax, assessee should pay municipal tax, not tenant. The owner have to pay municipal tax. And in the question, it is clearly mentioning that assessee has paid 10% of municipal value. So 10% of this figure as municipal tax. So we can deduct this figure as assessee has paid this figure. So less municipal tax paid 1,60,000, 10%, that is 16,000. Balancing figure is annual value, that you can write in the outer column. Okay. So next step is you have to deduct standard deduction at the rate of 30%. 30% of annual value. So you have to find out 30% of 1,44,000, that is 43,200, that you can write in the inner column. Next one, next item which we can deduct is interest on loan. In the question, it is stating that the other expenses of the let out properties are repair, insurance, land revenue, ground rent rupees 10,000. These figures are irrelevant for computing income from house property. We can't deduct these expenses. we can deduct only interest on loan. So here it is given that interest on capital borrowed rupees 40,000. This means interest on loan. Interest on capital borrowed means interest on loan. That is rupees 40,000. So you can deduct that figure, interest on loan 40,000. By adding these figures, that is standard deduction 43,200 and interest on loan 40,000, you will be getting 83,200. You can deduct 83,200 from annual value 1,44,000. So balancing figure is income from house property, that is 60,800. Okay, hope you understood how to calculate income from house property. Okay, thank you.